Uber stock has been going on a wild ride recently, so going up as much as 16% after the Q4 earnings report, just to drop up just right after that another 12%. So we have to look into the financials to see what happened exactly, what were the key metrics that the business has reported for the Q4 and for the full year of 2021. And we have to see in terms of profitability, are they making profit? Are they making progress towards the profit making? And what else happened with the business? So let's get straight into it. So here I've got their earnings results and earnings report that were released and announced for the fourth quarter and full year 2021. Some of the headlines are that gross bookings of 25.9 billion are up 51% year on year, at the higher end of the guidance that management had released previously. A positive net income of 892 million, but not so quick. That includes a 1.4 billion net benefit of Uber's equity investments. So it's not actually coming from the business, but we're going to talk about that later, what that actually means. What's more important is that adjusted EBITDA of positive 86 million, which was above the guidance that management had previously released. And other than that, we do have revenue growth year on year, 83%, very strong revenue growth here, obviously coming out of the pandemic, but still 83% growth to $5.8 billion. Diving straight into the supplemental data, which is really the more interesting earnings pack actually for in terms of Uber. We do have a graph here, or two graphs, showing us sort of the mobility and delivery volume basically for Uber over the past, 2 years almost. Seeing that the delivery business was actually much smaller than the mobility business, obviously, because Uber, this is what it started out as a mobility transport business, but now the delivery during COVID was the one actually saving sort of the business, increasing delivery, developing this second stream of income, which is now still above the mobility side of things. And you can see that although we had a few another COVID outbreaks on the way, which obviously impacted the mobility negatively, it's now recovering again and actually creeping up to the delivery volumes. So this is good to see. So now what we actually do have is we have two strong revenue streams compared to pre-pandemic, where we only had, really the mobility business as a strong grown out business. But now we have the delivery and mobility going almost in parallel. And as you can see that the mobility business here is creeping up again, hopefully reaching that same level as the delivery business, but we have to see about that. We do have some really good news from the EBITDA point of view. I mean, obviously investors are heavily looking into the profitability of Uber, because obviously that they make revenue, that they are known out there and a known brand, that's without question. But the question in terms of from an investor's perspective was always the profitability about Uber. So we now have the first quarter of adjusted EBITDA profitability. We can see that gross bookings have been growing, so this is US and Canada plus international on the right side, have been growing really consistently year on year. We had strong growth of 43% and 25% respectively, and that had a positive impact on the adjusted EBITDA margin. So this is everything after revenue, cost of sales, operating expenses, just before all the other expenses such as interest and tax and depreciation. So we have a slight, of course it's a very small margin, and you don't want to just have a 0.2 EBITDA margin, but it just shows you that development here from the left side of Q4 2019 now being positive, basically setting up the scene for future growth, hopefully in the next few quarters. So we'll have to see how that plans out. And in terms of business updates, so advertising is something that they've launched now in 30 countries, basically giving the suppliers possibility to actually advertise for their food delivery here on the platform, which is, it's just another revenue stream that comes from the delivery business. And they've seen around 225 million annualized revenue at that run rate that they had only targeted over 100 million. So that's a positive impact, and sees that basically the suppliers on the app are actually using that feature. In terms of the operating metrics, so what we've got here is the MAPC. So that's basically the number of unique consumers who completed a mobility ride or received a delivery order on our platform at least once in a given month. So basically, how many deliveries are we getting here? How many trips are we having per month? So this is basically a really, really good number to see, because obviously this is a million. So we have 118 million people getting at least one delivery or making at least one trip in a given month. So, and we do see that consistently growing over 20%, 27% year on year, and it looks quite consistent as well. The trips volume goes up as well as we opened up more in different countries, but the monthly trips per MAPC has been stayed quite relatively flat, which is, I guess, not a good sign. But we do have that volume per customer going up, which is obviously something good to see. Same with gross bookings, consistent growth. We do have quarter-on-quarter growth of 12%. Obviously, we did have an impact here, a negative impact of some of the mobility being restricted due to lockdowns and other things in various countries. I mean, I live in New Zealand. In New Zealand and Australia, they had, for instance, prolonged lockdowns where no one was really using Ubers. So I do think there's still a little bit of a pandemic impact here, but we obviously also have other things we're going to see very soon, other revenue streams that Uber is building up, and also the delivery business, which has been performing quite strongly over the last few quarters. So that gross booking volume translate into the revenue growth as such. So we do have 19% revenue growth on a quarter-on-quarter basis. Annualized, this is a 22% growth. As you can see, there was a dip coming from that, renewed lockdowns in various countries. But now, since we've kind of moved away from these sort of lockdowns, we do have consistent revenue growth quarter-on-quarter, which does look pretty well, pretty nicely. Year-on-year revenue growth here of 83%. So this is, I think, this is the running average, I think. So this is the year-on-year growth, 83%, which obviously is because of lockdown last year in 2020 or the year before. But the average run rate here is still pretty nicely. In terms of the EBITDA margin, as we said, we have 86 million positive EBITDA margin, which is only a 0.3% margin, but nevertheless it is profitable, and it's the first quarter that it's profitable. And you can see that there is obviously this positive development here, which comes out from more deliveries, but also increased revenue coming from the mobility side, which now finally translate into a positive EBITDA, because I do think that delivery has better margins than the mobility, but this is sort of the combined effect of a revenue increase from the mobility side, but a better business and second revenue stream now coming from delivery side. So in terms of EBITDA margin, as we said, we have a positive here, 86 million for the first time. Obviously, you can see that they've been operating at quite a big loss the last few quarters. So given that revenue increase, we were able to transform that into a positive EBITDA margin. And when we go further down here, we can see that when we break it down by segments, we do see that most of that comes from the mobility business. So as we've increased our gross bookings again, now to $11 billion, translated into $2.2 billion for the quarter, the adjusted EBITDA for that quarter on that revenue number, on that increased revenue number, is 575 million. So obviously, pretty good here. Still quite low. I mean, 5%. You would argue that this is not a really good EBITDA margin. So management still has to work on that and keep increasing that. And obviously, the costs here is like the driver is costing the company the most. But we do see what we wanted to see was the positive development of increasing that margin and actually making a profit, which management now has delivered. So it's gonna be interesting to see how the next quarters plan out, to see if they can actually increase that margin, or if those 2 quarters were just basically a one-off, or some other impacts were hitting the business. Delivery growth, so I mean revenue massive growth year on year, 77%. We do have gross bookings up as well, not as much as the mobility side, but the mobility side had a sort of once-off impact by these lockdowns, prolonged and renewed lockdowns. But we do see from the delivery perspective, we have a profit here of 25 million, but it's only 0.2% EBITDA margin. I mean, similar to the delivery business, we came out from a loss into a profit here, but it's even smaller than the mobility business. So we obviously want to see that going much, much higher in the next upcoming quarters. And then the third slide here, the third segment, so it's a relatively new one that not a lot of people are aware of yet, I think. It's the freight business. So obviously Uber wants to be an all-in-one transportation app and transportation solution. So they want to deliver you the groceries and food, get you from A to B, and also get your things from A to B, which they're now working on obviously a lot here. We do see 245% revenue growth of the freight business, so growing to over 1 billion now in this quarter. Still running at a loss, but I think this is quite an early sort of business segment for Uber, which they're still developing out. So yeah, interesting to see what's going to happen with that and how that's going to plan out. And also, you know, in terms of the future, it will be interesting to see if Uber can move the freight, delivery and mobility businesses into a sort of autonomous solution by using other companies such as Tesla. I do think that margins would just explode suddenly, right? Like everyone would use their app and suddenly Uber would turn into a tech-only business where it's just about making the bookings and basically paying for a lease amount of the cars, which would be really interesting to see, but obviously that's still like a far vision ahead. Now coming to the numbers, to the actual consolidated financial statements for the 3 months ended, but also for the year ended December 31st. So if we look at the year-end numbers, so revenue obviously up massively to $17.4 billion compared to $11.1 billion in 2020. But what we're actually interested in to see is cost of revenue. We're obviously that cost of revenue from the revenue, you get the margin. So you're looking at this here, which is $5.1 billion cost in 2020 versus 9.3 billion. This one giving us a 40% margin, whilst here we have a more than 50% margin if you take out that, or slightly below 50%. Definitely see an increase in gross margin here from that perspective. We do have other costs obviously going here. So with that higher revenue, it did come with higher sales and marketing expense. So we had an increase of $1.2 billion here. Everything else seems to be quite flat. I mean, increased depreciation as well, but that doesn't make a huge impact on it. It's more like, sales and marketing expenses have been going up to increase our total costs and expenses. And overall, because of the higher revenue and margin increase, we're able to make a lower loss from operations to now $3.8 billion compared to last year, $4.8 billion. So definitely improvement there, but still obviously a huge loss from an accounting perspective. I mean, we looked at the EBITDA margin, we looked at that, and we do think that they're making good progress here in terms of that, but obviously it's still very low. I like the gross margins, but so if they were able to actually spend less on the sales and marketing or in general expenses, because I do think that R&D is probably still needed. Yeah, I do think that if we could reduce the operational costs basically and advertising costs, we would actually be looking much better. But it seems like we do need more volume overall, because even if you reduce a few billion here and there, it's not gonna be a massive profit. So we do have a good gross margin, so we do need more revenue. So I guess the focus for the business will be to expand the revenue base, so to expand their streams, expand the freight business, expand the obviously get the delivery business up and running to be at least at par with the transportation, the mobility business, getting it up to par with the delivery business, which has been saving Uber and performing quite strongly. So I think this is what we want to see in future now. One thing to note from the balance sheet is we did have an increase in long-term debt. We did see like a $1.5 billion increase here to $9.3 billion, like quite a lot. But if you look at the current assets or cash balance is $4.3 billion, current assets is $8.8 billion. So not really that alarming as such. You don't want to see it being over leveraged, of course, and as long as the huge billions of dollars of losses continue, the company will require more capital, more investments, and so on. So we do see that additional paid-in capital has also increased to $38 billion, basically diluting you as a shareholder as well. This is basically investing in Uber, because it's such a popular name, comes at a price here, right? So we did increase our we did increase our leverage, but also our capital, diluting the shareholders. So this is obviously something that we need to keep an eye out in the future. And here we do have overview of the equity stakes. So we did have a few well-performing investments such as Grab and Aurora. I think those were really performing well, making a unrealized gain basically of over $1.8 billion. We did have a liquidation of Didi, which was basically a counter effect to that, was selling that stake at a loss. So but still basically now we're seeing a profit from Uber from the net income perspective because of those unrealized gains from their investments. In summary, we have to say, well, basically good quarter for Uber in terms of revenue growth, gross bookings growth. The delivery and mobility business have been performing well. The freight business is coming up and showing some promising numbers in terms of the volume and the revenue growth there as well. From a top line perspective, really positive quarter. We obviously had that positive net income, but that mainly came from the investments, which doesn't really count because we want to see the core business being profitable and we do want to see strong margins. We did have positive EBITDA margins, but the actual percentage of it was very tiny. So it's a good progress, good start, but we do want to see increased profitability going forward. And this is what investors are going to look out for in the few upcoming quarters. Obviously want to keep that revenue growth consistent, but also that it trickles down a lot from bottom line perspective to gross margin, but also to EBITDA margin and net income. I hope you liked this video. Let me know what you think about Uber. If you're watching it closely, if you're an investor in it, let me know in the comments below. Leave me a like here if you like this content and subscribe. Thanks.